Hey, welcome back. Final hour session. Today we're going to do a little trading 101 strategy session, and had some questions come up in the community about said strategies. LEAPS and the poor man's covered calls, which is a couple ways to look at some long-term trading. There are ways to do poor man covered calls for weekly and monthly income. There are ways to do LEAPS out 1 to 2 years and make the debits cheaper. I call those diagonal spreads. So yeah, I want to take a look and kind of give you a breakdown where we're at for the day. We're trading at 628.23 on the SPY. Markets are up, fresh high in the portfolio today. That's always a good thing. Let's go to SPX at 63.03, just drifting above my ceiling today. Potential top based on the VIX, which has been pushing back all morning. Where'd my VIX chart go today? Get this VIX up 1 second. VIX is trading at 1656, so back down below the lows from yesterday after the VIX expiration, after the rumor of Trump suggesting he's going to fire Powell. The market reacted and then not reacted after it was denied. So whatever. VIX is down to 1655, and we're up to 6303 with the melt up, retesting the highs from Tuesday after CPI. Curious to see if we will sustain that move, if we will break these highs and stay here, or hit this high and then start to fade next week. There are a lot of positive gamma levels just above the 6,300 handle. I'll show you that right here, actually. Let's go 6,300 for the 17th, 18th expiration. So expiration on Friday, trading at 62.94. You can see that we have a bit of a call wall right around this 63.50 zone. And let's take this over here to the 18th as well. Okay, so we've got some negative gamma right at current levels. So 6,300. This would be where I'd say a little bit of resistance coming back in, all the way down to 6,200. These are the two bigger levels that I'm watching for the week. I mentioned them in the video that I posted on TradingView and my Discord channel. 63, 6,200. It's just we're in market don't care mode. It's like we're going higher. It was tough to time. I took a couple of stabs at these all-time highs and didn't get the market to really correct. It's no big deal. I've also seen fresh highs in the portfolio, taken some good income plays. We've taken trades this week in daily profit play. We had 2 winners today. 565 was a winner. And also had another one for $40. So we got a nice little streak going there. Let's go 954. What was the center price today? Center price today around 62. Where was today at? Oh yeah, right around 62.65. Okay, just updating 62.65. Updating the other trade that we took today for daily profit play. That trade closed out 70 and 80. $62.80, $62.70, $62.75. Okay. Daniel, that's not too shabby for a little futures grind, right? Those you're doing there grinding for the futures down 4K, worked it back to 622 loss, worked your way out. Yeah, not bad, not bad. That's good, man. That's good considering all you typically post is green. So, it's real trading. So appreciate you sharing. Okay, updated there for daily profit play. Waterfall's looking good. New highs in the portfolio. Did some rolls. Added a trade this morning for Project Options Edge. Zoom. I've got a 111 on Palantir that I'm probably going to close up on probably Monday, to be honest. Just give myself a little bit more time. Palantir is right here. So pinch is up about 30 bucks and ratio spread up about 80%. I'd like to see what this looks like over the weekend. And then my 1111s right here up about 240. This is 98. I mean, I might as well take this one now. I'm not going to get much out of this one for another penny or so. So I'm going to close this one down. If I can close it at 3 cents, maybe I can, maybe I can't. Mid is 3 cents. Let's find out. Otherwise, the ask is 17. I'm not going to sacrifice that right now. Let's see if I can go like 5 cents debit. 5 cents debit. Nope. It's 249. Let me see if I get 9 cents credit. I'll just penny this up thing to like 9 cents. 6, 7. All right, close out for 8 cents. That's not too bad. So 248 closing out for hopefully 8 cents. Yep, got it at 8 cents. Good. So these 1111s are going to be closing out for profit, anywhere between $250 to $500 per account. 8 cents is good fill. Closing at 8 cents. Very good. Closing at 8 cents. Not 9. I said 8. Getting some buying power back and taking some profit. 8 cents. Okay, so that was a 249 credit, closed at 8 cents. And I'm doing that way before expiration. There's still 183 days in that trade. And I pulled 241 out of 249. That's 96.7% of the max credit. Okay. And if I have anybody in my Project Options Edge right here, let me search for Palantir. That one we did, and this one. This is the trade right here. So this trade is going to be updated. This is going to be trade management. Trade management. Entry 248 credit. Closing 0.08 debit. Keeping 96.7% of max credit. Trade closed. Get some buy power back. That was 2 puts, a 65 and a 62.50 put, and then a profit trap, the 130 by 125, which prices above both of those. So I'm pretty much eating the profit trap and getting two wins on the naked puts. So combo trade looks pretty good. Let me go into this other update, and then I'm going to get into the LEAPS and poor man's covered call today. Just give me a second to get some updates. So I'm jumping into Pulver alerts, reply, trade management update. Entry 248 credit. Closed 08 debit. Keeping 96.7% of max credit. Trade is posted. So Palantir is done. Trade tracker for that trade in Project Options Edge is a winner. So I've got the ratio spread and the 111. You find that in here. Okay. Palantir. Winner. Okay. Looking good. All right. Also, just want to share this before we jump into the education stuff today. My daily profit room, my daily profit play, one of the strategies that I have where we trade some indexes every single day. We're going to be evolving that trading session into about a 90-minute to 2-hour session. And we're going to talk a little bit of everything. So, just to set some expectations before we officially start this next week, Monday through Friday, these are the trading services and educational services that I offer. If you'd like to trade the indexes with me daily, daily profit play. If you'd like to swing trade for weekly and monthly income, waterfall income. If you'd like to trade earnings and major news catalysts, news breakers. If you'd like some high reward to low risk trades, double up alerts. If you'd like a scanner that spoon feeds high volatility trades and parabolic moves. It's all built into like a 12 indicator combo scanner. I love these trades. I have an alert service that goes with it. The pinch point scanner is now down to $4.97. There's no download needed. There's nothing fancy. We just give you an access token. You can find it on our web platform. It scans over 9,500 stocks, and today I think spit out 7 that I was interested in trading that became actionable. So, take a lot of stocks, a lot of looks at the markets, find something actionable, and price them out. Crash Insurance Masterclass. If you like to learn how to protect your portfolio, not paying a ton. Okay, I don't hedge like crazy. It's like I hedge to be protection oriented. I hedge to maybe sacrifice about 1/4 1%, maybe half 1%. And a lot of times those hedges can pay really, really well. If I'm sacrificing, let's just say 0.25%, it's enough to potentially protect an entire like 2.5% of my entire portfolio. That's 10 to 1. It could be much bigger. I have some hedges right now that if the market doesn't just continue this melt up forever, I've got a 16 to 1 hedge, a 25 to 1 hedge, and a 44 to 1 hedge out to the end of the year in the futures market. And if those don't pay, that's fine. I sacrifice less than 1% of my account, and we probably see a lot more melt up. So that's Crash Insurance Masterclass. Project Options Edge. This is one of my more advanced courses where I kind of give you the kitchen sink approach. These are all the different things I trade. Example would be, I'm just reading off some of the winners we've had. Diagonal spread winner, ratio spread winner, 1-1-1 winner, naked put combo, double broken wing butterfly, covered call campaign. Yeah, I mean, it's a variety type service where it's trade alerts. I want to make sure you have the understanding of what strategies we're doing. You're comfortable navigating your broker platform. I also use my capital in order to take trades with Project Options Edge. I'm willing to own a lot of shares, i.e., ratio spreads, naked puts, things like that. Where if I get assigned, I'm going to repair that trade instead of having it take a loss. So that's a little bit more advanced. But obviously, I'm willing to teach anybody how to be at this level. It doesn't take that long, but that's kind of the if you're going to kind of graduate through a couple of options services and work at managing a portfolio, this might be a good way to consider that. And if you want just some bonus education, practical options, just figure out how to trade the market, very simply put, up, down, or sideways. So we've got a full course, a quick guide. This quick guide is $27, and this full course is $497. So I'll be up, like I said, next week. My daily profit play sessions are going to evolve into a little touch point every single day. I do have a screenshot of what we're going to be talking about here. So Monday is going to be Macro Monday. Tuesday is going to be Technical Tuesday. Watch List Wednesday. Trending Thursdays. Fast Money Fridays. And then some of the themes and some of the touch points that I'll have. So there'll be a little bit of touch points on all these services throughout the week, just to make sure there's something for everybody. I'm trading however I need to trade to get the job done and try to make some money. And hopefully there's something in there that makes this simple, easy to understand, easy to execute, easy to manage, and hopefully that keeps a lot of traders happy. Okay. All right. So that's all coming next week. Today, based on the VIX, I was looking to see, would we have some resistance here at 63? I want to check and see where, 40 minutes left until the close today. I don't think I'm going to force a trade because we could certainly still melt up towards the end of the day. But I'm curious. Yeah, these are really bad. A 63. I mean, this isn't awful, but I don't want to call the top. We could still head up a little bit higher if the market's going to melt up. I'm going to see something. I don't know. It's unlikely we're going to make a move today, but it could be tomorrow morning for this gap. Let me check on one thing. It's forced to trade. I'm looking at a top maybe at 63.30. Let me see if I can get a 63.25 to 30, 25 to 30. Unlikely we're going to rally in 40 minutes, but let's get a 275 fill if possible. Maybe a $3 fill. I'll put this in at the top. Okay, we'll see if that even comes close to taking. Otherwise, no big deal. Trying to think anything else for right now, maintenance wise. I think we're good. Courses are going pretty well. I want to check on a couple trades for my double up service. Got a trade running on SPY. Right now, I've got one up 76%, and the other one is down about the same. So, I mean, net positive between the two. I'll read it at 628. If this thing gets up to 629, 630 tomorrow morning, this should be a little bit better. I should have saved this trade in my. Let me add in all the trades here. So I'm going to go put. Let me add in another buy put. So this is for the 18th. The puts are down to 620. So this is a 620, 622, 618. And then the calls. So I'm going to add a buy call, add a sell call, increase this one. This is a 629, 31, and 27. Is that right? 29, 31, and 27, and 18, 20, and 22. So yes, this is what the trade looks like tomorrow. This is where we are currently trading. So if we come into open tomorrow morning, let's go Friday, 9:30 a.m. opening bell. If we're trading around 629 or so, 629, 630, I should have about 100% gain on the call fly. If it stays and hovers up there for the day, this will just continue to show some profit potential. What I'd like to go after is, could I turn this call fly into a 125, 150, 175% gain? That's enough to take the winner, close out the loser, and walk away with a net return. So I surrounded the ups and downs playing that game of support resistance. The resistance level to me is 6,300 this week, which is around 630 SPY, and around 620, which is the 6,200 support. So that video was posted in my Telegram right here. Go back onto, I think I posted this on Monday. Right here. Yep. So highs at 6,300, lows at 62. Watch key levels. Okay. 354 winners now, 355 winners now in daily profit play, 84 winners on waterfall income, and the trades just keep on coming. Okay. All right. So that's a little Telegram action there. Discord link, I can share that. You are going to do all your programs in one. No, it's not. I'm not doing all the programs. I'm just going to touch upon, a program a day. So we'll have like a little showcase, little product showcase. I'm going to set some levels. You're essentially coming into my trading room every day to have a daily routine. My daily routine is a little top down. What are the levels for the day? Am I looking more bullish or bearish? What's the broader market going to do? Let's spot check some other things like, currencies and futures. What's the bigger picture showing us, advanced decline lines, things like that, market breadth. And I still want to trade every day for my daily profit play. Waterfall income still every Mondays. We've got earnings season kicking up, this week and next week and the next few weeks. So newsbreakers will be very active. Double up alerts. I'm trying to find some trades here week to week if I have some good outlier levels. And then pinch point, just need to throw the scanner up and get a couple good trades and price them out. Okay, so pretty simple. And then Project Options Edge is kind of always running on the discretionary side. Link for Discord, sure. And then I want to get in here to save the last 35 minutes to teach some lessons. Let's go Discord channel, Chris Pulver Trading. This will be good for 30 minutes as I post it. So 30-minute link going live. Okay, there's a link. And first things first, when you jump into my Discord, read the rules. It just shows that the scammers happen. Unfortunately, I don't send direct messages. I don't send friend requests. People try to impersonate my profile all the time. It is annoying. I talk to everybody in my Discord on the public channels. So if you come into my Discord, read the rules right here. Okay. And then this is for everybody: free group chat, Forex chat, stocks chat, options chat, futures chat. Anytime I'm live on YouTube, any blogger analysis that I post, you want some links, education updates, any link to my services. Okay. I'll post links in here. Private instruction. If you have, if you want to just work with me one-on-one or small groups up to 8 traders, that's where I kind of cap it off. If we want to do 1 hour and 4 hour workshops, affiliate discounts, trading view, dynamic trends, tasty trade. What else? A1 Trading's Edge Finder, Edgeful, little AI dashboard, tradingindicators.com, lots of stuff for, MT4, MT5, back portfolio back testers. So anyway, some of the, good partnerships I have in the industry, I post them here under affiliates and discounts, so you can save a few bucks. And yeah, so education, survival trader, same thing here for my legacy education. So if you have any questions, just hit me up here. I'm in this stuff every single day. Okay, so this is my Discord test doing live session, right? So that's me, and I post messages in the public chat every day. You ask me questions, that's a good place to do it. I'm just saying, like, I don't care if you send me messages, I'll reply, but I don't initiate. And so unfortunately, here's what I wouldn't be surprised if I show it here. If I check my server right now and I go into members, there's probably some people that impersonated me already. Real. Okay, well, that's me. Any fake Chris Pulvers? Nope, that's me. That's good. So that's good. I clean this thing every week. So no impersonators, no imposters right now, which is good. But that is one thing that's really annoying. Do I send you messages on WhatsApp or Telegram? No, it's not me. I'm I'm on my YouTube channel. I'm on Discord. I work the Prosperity Pub. Work with A1 Trading with alerts. That's it. That's my ecosystem. So I'm not offering crypto stuff. It's like all that stuff is full of scammers. So just be careful. Ask me. You know how to find me and see me every single day. Cool. All right. Sounds good. Okay, so let's go to this. Trading session, strategy session, leaps, and poor man covered calls. So how many of you type in a wire yes in the chat if you've heard of these before? A leap, a poor man's covered call. Type in a wire yes in the chat. Okay. LEAPS, it is an acronym for long-term equity anticipation securities. I can see why they call it LEAPS because nobody wants to remember that. What they are is they are long-term options contracts. That's it. So anytime you're going pretty much a year out or a year plus, it's a leap. You can sell leaps. You can sell puts out a year. That's a leap. You can buy calls out a year plus. That's a leap. A poor man's covered call is instead of owning the underlying shares, the poor man's covered call is you utilize options, i.e., you buy a call and you can sell a call against that to collect income. I actually want to show you an example of that today. I also use for some of our like higher premium trades. If we go tasty, take a look at some watch list items here. Let's go to liquidity, high option volume. We'll go liquid symbols. Actually, let's go earnings, dividends. No, crypto, tasty. Highs, full session options, market default, fast movers, hourly, IVR. I'm going to go by just based on IVR. Okay, so Paramount trading at 12.97. Not that interested. Decker's at 101. That's actually pretty good. I'm curious what the call skew is on DECK. I'll take a look at that one. We got some other ones here. DOC, Lily. That's one. That's a bit. This would be a good one for maybe like the poor man's covered call because it's way cheaper than buying the underlying at $761. So if you like Eli Lilly where it's at, I was actually putting on some ratio spreads on Eli Lilly. So we're trading at 761. I mean, if you went out a year plus, okay. So here, let me just give the definition. Okay, a leap is essentially any option play that is 1 year or more. So a pretty standard leap would be a long call option for, 365 days or more. Okay, or you can do a sell put option for 365 days or more. Now, the reason that these are effective is if you go out a year, I personally like to sell put options out a year. If I'm pretty confident the market is going to go up, then I sell a leap and market goes up and I get paid on that leap. So here's an example. If we think the SPY is going to be, I'll come back to that watch list in a second. If I think the SPY is going to be higher in the next 12 months, then I go out to, let's go to summer of 2026. Here is June 30th of 2026. That right now is the closest one I have to a leap. I can go out further. I can go to September, but I'm going to go June 30th of next year. Okay. And right now, if I want to sell and think that the SPY is going to be above, you have lows this year at what price? Lows this year at 480, right? So I could sell a leap on the SPY out a year. So next summer, this thing expires. And right now, let's see here, 480 is the low. I could buy the 480, sell the 475. I mean, that's a good income play if you ask me, right? So if price goes up, 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 that's fine. Now I'm going to take this trade, but not as we are in a very low implied volatility environment. If we dip a little bit, I'm looking for the markets to possibly pull back, I would say at least 28 points or so. Okay, 28 points. So let me check something really quickly here. If I go at the money and drop 28 points to 600, that is an increase. So we go from 33 and we drop about 20 points to 25. Okay, so that's about a $9 difference. And I'm going to try to put this at a price that I'm happy with. If I sold the 480, okay, I should expect this to go up about $9 in price. So I think what I'm going to do here on some of my larger accounts is I'm going to take a leap on the SPY. I'm not going to take the fill at 8.15. What I'm going to do is I'm going to ask this thing to get to like $17.50. Because if we drop about 20 to 25 points, that increase in volatility should also increase my option chain. I'm actually going to set a take profit at a credit fill at $20. Okay, so that may be tough to fill. In all honesty, that might be difficult to fill. But I think at least having like a 9-point swing, 10-point swing, higher volatility, these option prices should go up. If I get filled for $20, that's $2,000 of credit that I can pull in with a probability profit of 95%. Now, yes, there's risk. This is a naked put, but it's out, 348 days. The nice thing about a long dated put like this is time decay. So if I'm out about 348 days, if I can hold this trade for 90 days, there's a good chance I could probably grab 25, 35, 45% profit on this thing. So I don't have to hold this all the way to expiration to make profit. Okay. So I'm going to put here, I think 1750 would be a pretty good fill. I'm going to take this on some of my larger accounts. I'm going to go here on the SPY. So I'm actually going to take a leap. It's going to be a naked put leap on the SPY out to summer of 2026 and set it at the April lows of this year, right? I'm going to go out a little bit higher in credit and see if we have a volatility event that this can still fill me at a level I'm interested in getting a trade in. So I'm going to put a 1750 credit, which means this is almost going to have to double in value. All right. So that gives me some wiggle room on an increase in the VIX, maybe a little bit of a ventilation through like August and September. And if I can get this thing filled for 1750, great. That means that my break even would be 480 minus 1750 puts me at a break even at what is that? 460, 250. So if I was to own shares, which I would be happy to own shares of the SPY, I'd own shares at 462.50. And I'd own the shares and I'd work through them and I'd repair them and I would just take that as an investment. Okay. All right. So I'm going to take this trade here for 1750 pending order. 1750 on the following accounts. This account, 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 this account. All right, these accounts. These are all portfolio margin accounts. So 1750 pending order. 9732 pending order. And truthfully, I'm almost wondering if I should put a ratio spread in, because that does take a little bit of that volatility push if we have a drop, but this should be okay. I'm still asking for a good fill here. Okay, so one more. Okay, so get these set up and going. All right, so trade is in and pending. Like I said, pending order. And that's okay, because I'm not looking to get these things filled at current price if the market's going to have, I think we have some type of volatility increase, August 1st to, let's say, October 1st. I think the market's going to at least have some type of correction, maybe to the tune of 4 to 6%, something along those lines. So let's go SPY PM accounts. I'm going 6:30 expiration, selling the 480 put, asking for 1750 credit. Pending, not filled. And the other option would be if I did a 480 by 475. So for 740, I can take a little bit of that volatility down by having at least a long put in the trade. So I can buy the 480, sell the 475. It's essentially like selling a naked put at 475, but at least I have a profit trap in case things get pretty bad, which helps me lower my cost basis. So this one would be $5 minus. It's about the same. I'd also want to increase this credit to like $10, $12, $15. So I'm just going to keep the put on and see if this thing will increase in value. Okay. So let me give you how, like, the breakdown of this on a risk graph and show you what this trade looks like. So if I go SPY, we go out to summer of next year, so June 30th of next year, and I sell a 480 put. So I add a put, 480. Okay. There's the trade. So yes, there's risk in the trade if price is going to fall all the way back down. I mean, for us to get risk on the trade, the SPY would have to fall all the way back down to these lows. This low is 482. So by summer of next year, the SPY would have to be falling about 23.5%. I think that's a pretty low probability that it's going to do that. If it does, I'm okay owning shares here and kind of building through a position, but the odds of that happening are pretty slim. Assignment chance in this trade is, I mean, honestly, it's going to be an assignment price of maybe like 9% chance of assignment. If you want to manage just the put side, just the naked put side, you don't have the cash to own the shares. You can still do leaps. You can still sell leaps. You can still go long term. What you want to do is get a credit you're happy with and then do a 2 to 300% stop loss. So let me talk about this more in some white space. All right. So let's get this all labeled out. So looking at leaps. Okay. I am entering a pending order on the SPY. So I'm going out to June 30th of 2026, selling the 480 put for 1750 credit. Okay. Right now the trade is offering about 850. So you can take the trade right now if you want to. You're getting 850 credit. I think there's going to be a volatility push in the next 30 to 60 days. And so I want to be bracing for that a little bit. And I think in order to take volatility from 15 or 16 up to 20 plus, maybe that gives us like a 4 to 6% correction. Maybe it's April, maybe it's August 1st, maybe it's slightly into August. I don't know. It doesn't really matter to me. It says if I'm right with a volatility push up, then I should see some increased credit offerings on these trades. Okay. So offering 850 now, but I'm going to try to get a slightly higher fill. What happens on the trade? What do I need to happen for this trade? Okay. As long as the SPY is greater than 480 by next summer, I keep $17.50 credit. So that's $17.50 in income. Okay. Price can continue to go up, sideways, even fall. And we looked at up to 24% before I truly have risk in the trade. Now, I want to put risk in quotes because the reality is if the market were to drop, if the SPY dropped, 50 points, if I get filled at 1750 and price continues to drop and those option volumes continue to go higher and the VIX is rallying to 30, 40, 50, I'm going to be in a drawdown, okay? But by the time I get filled, if I get filled at 1750, I'm hoping that the market's already had a flush and had a ventilation move that allows me to get filled, and I'm getting filled at a good price, and then the volatility spike starts to mean revert, and I get a high credit fill, and then time is on my side, right? So the management for this trade is as follows. Okay, I can do a time management trade, which is check at the halfway point, right? So if I'm out 360 days and I check at 180 days, what's my profit target? Okay, does this show percent profit that I'm happy with? If so, I can take it. We can also do price management. Check for the 50% max credit. Check for the 75% max credit. And check for maybe like the 85 to 90% max credit. Right? And the reason I'm not going to say, well, just let it go all the way to expiration is obviously that's 100% of max credit. You'll find out in a lot of these trades, if the SPY continues to go up this year, if price goes up, 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 up on the SPY, and this trade is filled still, then time and price going further up makes my trade a higher probability of staying out of the money, which means that the option price is going to continue to decay. So my 1750 will trade for 1250, 1050, 750, 550, 450. So reality is if I get filled for 1750 and let's say after 90 days this trade is offering me $1,000 profit, I'm still leaving $750 on the table, but the question is, do I want to risk the extra $750 for potentially the unknown of like, what if the market starts to draw down? What if the market tips over? What if the US enters a recession? Blah, blah, blah. So if I have all this time left in the trade, I can just take a profit target based on a percent. If I've got 50% max credit, 70% max credit, 80+% max credit, I don't mind taking the trade because it's way more capital efficient to get out of the trade and just allocate that buy power back into another trade. All right. So for me, if I take these trades, I usually like to get out at 75+% of max credit or higher. Some trades I'll hold all the way towards 90+%. Sometimes I don't mind closing trades out if I'm like 95+% max credit. But for a good rule of thumb for me is if we see 75% of that max credit. So if that was the case on this trade, if I get filled at 1750, so if I'm filled at 1750 times 75%, that means I'm keeping about $1,300 of that trade. So I'll leave $400 on the table, but I'm keeping, $1,300. That's a pretty good win. And maybe the time that it takes to do that is 100 days, 80 days, 120 days. But give myself, like another big chunk of time that I don't have to sit and hold that trade. I can reposition for it and do another one. Okay. Good question. If you're taking a leap on the SPY, your margin is impacted. It's going to take buying power for sure. So this one for me, like the buying power is going to be, so the margin I think it required on this trade for me is about $1,400. So it's portfolio margin. So I get a pretty good chunk there for a naked put. And if I were to take the assignment, then I'm still taking that cash position. I don't trade. So even though these accounts here show option buying power and I have option buying power, what's my total? I've got option buying power at like $1.7 million and my stock buying power is around 2 point something. Okay, so I've got 1.7 million in option buying power, 2.05 in stock buying power. Even though I have portfolio margin accounts, I also have a lot of IRA accounts. And so I don't ever try to borrow margin to trade. So I'm typically, if this is running low, if this column here for option buying power is running low, then I'm fully allocated. So I have plenty of cash to still deploy in this market, right? So even if I were assigned at 480, the most that would tie up for me would be $48,000. I still have plenty of cash to allocate, and I'm doing so at a massive discount. Okay. So that's my point is I have the buying power. I'm not going into margin to do this, but if you have a margin account, you don't have the capital to own shares of the SPY, then be conscious of that. Okay. Let me go. Oh, fudge. I didn't mean to delete that. Here we go. Okay. Let's go one more thing. How about stop loss management? Stop loss management. So stop loss management. I am willing to own the SPY at 480 minus the 1750 credit. Okay. So that puts me with a break even of 462.50. So if I own the shares, which means the SPY has to come all the way down to below 480 by expiration, I take the shares at 480. I still have my credit on the trade. My break even is 462.50. So I'm willing to own the SPY and repair with covered calls, which means I would just try to sell something at the money and try to flip it for, probably $500 to $1,000 if I'm really worried about the positions, or I would try to go up as much as, right now I'm in a repair position that's going to make me about $4,000 if I let it get called away, which is August 1st. But I'm going to continue to repair it and continue to roll it and continue to increase my profit potential to hopefully make it up to $4,500 or $5,000 and just keep rolling it, keep it in a good income position, right? So I try to do like $1,000+ repair. Okay. If you don't have the capital or don't want to own the SPY, then use a percentage-based stop loss on the put. So example would be 1750 if filled, you can stop out at 34.50, which is a 100% stop loss. Or you go to, what is that, $52? $52 debit, which should be a 200% stop loss. So rather than tying up all your capital, you could still have a stop out where it's like you lose, you take a small loss on it. Okay. So for me, I have the buying power. I'd say I'm going to own the shares. And even though I might be, on the hook for like a naked put, I'm still going to have hedges that would help offset that, lower my cost basis. If I got to start on the S&P at a 23% discount, there's not much further I'd have to go to the downside. I'd be willing to ride that thing as low as 30, 40, 50% drawdown and still plan on the upside being pretty fantastic. It might take time to get back. It might take 8 or 10 years to double that money, but if I take $40,000 to $50,000 and double it in 5 years, that's still pretty good for just a small position. Okay. All right. Does that make sense? So this kind of covers the leaps. Now this is just the sell side leap. So if I do a sell put leap, so I'm basically out a year, what does it look like? Well, I'm doing this on something like the SPY or the Qs, ETFs I don't mind owning. You can do this on any of your favorite stocks. So if you love Palantir, if you love NVIDIA, if you love any of the Mag 7 stocks, you can do this. Let's just take a look out a year on all these stocks. Okay, let me take a screenshot here. Hopefully it'll let me. All right, so I'll just save this screenshot as a reference. Okay, so we've got that. That way I can delete all this. Let's see what offers some good premium. So, you can throw some stocks at me if you'd like to. I'm just going to go Mag 7. So let's go out to summer of 2026 and look at Mag 7. So if I sold Let's find a level that we're interested in owning. Okay, so Apple's April lows. I think that's a good level to say, hey, look, I don't think the market should go too much lower than that. So Apple at 170. So I'm going to sell a 170 put out to next summer. So I could go June 18th of 2026 out 336 days. Okay. If I do the 170 put on Apple is offering $6.25. It's just income. Now, same thing applies. If I sell that put, I'm on the hook for any drawdown. If the market goes down 10 points on Apple, I'm going to be in $1,000 drawdown. This is going to increase by probably $7, $8, $9 in credit. So I'm going to be in a drawdown. But the only time I'm going to take that assignment is if price is way below the strike price and I'm like the only person willing to buy shares at 170, so the broker's going to assign me. Or Apple just stays like hanging out sideways choppy between like 190 and 210. Maybe Apple rips to the end of the year because it all of a sudden catches fire on another AI position. It gets back up to 240, 250 again, like it was here, right? Up to 259. If I do that put to the 170 and we go all the way back up to 260, that $6 or $7 is going to be income that's easy to take profit. Like that 625 credit's going to trade for under $1 in no time if price goes higher. Okay, so I'm just going to take some notes here. So Apple, I'm looking out like LEAPS. Okay, so Apple 170 is offering about 625. Okay, Apple Leap 625. How about Amazon? Amazon, if we go down to the lows at 161. I'm going to go out to next summer on Amazon. Let's go June of 2026. The lows around 160. I can get $4 for Amazon. So 161. So Amazon 160 is offering $4.15. Okay. How about Google's not too cheap after the split? We're at 183. I think Google's lows around 140. Google low here at 140.76. So if I go out to Google next summer, this is Google out to, we can go 2026 goes out to June. Lows around 140. I can sell the 140 put for 465 on Google. So 145, or I'm sorry, 140. That's for 465. Okay, what else? Meta. Meta's a little bit pricey. I wouldn't be too excited about Meta owning shares just because it is a $700 stock. If it came all the way back down to 480, it's going to pay some premium, but that's an expensive stock and that's a lot of capital to tie up. So I'll also put it in there. 480 is the low. Let's go out to next summer. So June of next summer, 480 lows. Obviously with the price being more expensive, you get 1380. That's a pretty good income trade. So Meta, the 480 would be 13. So the 480 put is offering 1380 in credit. Microsoft, a little bit cheaper. Also had a nice low around the 350 handle. Microsoft lows at 345. Go out to next summer. $345. This one's surprisingly low for a price that expensive. I mean, heck, Amazon for 160 you get $4. For Apple 170 you get $6. For Google 140 you get $4. Microsoft at a 340 low, which was down here, that 340 or 345 low, you're getting $420 for that. So I'd say if I'm looking at percentages, Microsoft is on the low end for premium. 345 would be a $420. Okay, let's go NVIDIA. NVIDIA trading at 173. The lows on NVIDIA is right around $100. Okay, so we have lows around $86. So go out to next summer, $86. This one might not offer a lot of premium because it's ripped so aggressively. Yeah, I mean, you get $1.80 for NVIDIA. That's going way down there though. NVIDIA 86 would offer $1.80. But based on a percentage premium, that's not terrible. It's not terrible. It's just so far out of the money because NVIDIA's been ripping so high. And then what else? Tesla wouldn't be a bad one. Lows in like the 212, I think, were Tesla lows this year. Lows around 215. So Tesla out to summer of 2026. 215s. We've got a 210 or 220 put option. You can see that's within the expected move. I'm just letting the option chain fill. Yep, Netflix earnings today. That's correct. After hours. Okay, so the 210 or 220 on Tesla, that's the low from April. That one's not too bad. Price hasn't responded and recovered the way that typically I'm going to go 210 here for Tesla. So 210 is 14.95. And am I missing any? I know you can throw Netflix in the mix and you can look at some other ones, but that is 1, 2, 3, 4, 5, 6, 7. That's your Mag 7. You want to throw AVGO in there, which has had a huge recovery as well. You know, this is a top 10 stock trading at 286. Can we sell this one down to 140? It's probably going to trade like NVIDIA. It's going to be way out of the money. But next year, if I sold the 180, 140, so even further out of the money, see what it trades for. 140, maybe offering like $2, 289. That's not too bad. AVGO selling the 140 for 289. Okay. All right. That's 8 stocks. Now, the reason I'm adding that up right now, we have QS crossing 1371. Look at that thing. QuantumScape. I don't know if I have anything on QuantumScape or I already took profit. I think I took profit in this one already. Let me check. QS. I don't have it. Okay. So the reason I'm adding these up is, let's just say for the sake of, hey, look, if I want to own any of the top 8 stocks that I just talked about, Apple, Amazon, Google, Meta, Microsoft, NVIDIA, Tesla, AVGO, if I want to own them, or I want to just look at income, strictly income, you can manage the put side. You're obviously going to have some risk in the trade. But right now, if I went out to summer of 2026 and I sold a put a year out at the April lows, right? Well, I'll tell you why. Because if I just did mags, what am I going to own and what income am I going to have? If I just did mags, I'm going to own one symbol for like a $30 assignment. That, I mean, how many shares do I have to buy to make it worth it? I'm just going to show you just based on premium of each individual stock. 625 on Apple, 415 on Amazon, 465 on Google, 1380 on Meta, 420 on Microsoft, $1.80 on NVIDIA, 14.95 on Tesla, and 289 on AVGO. So I could put in an April low sell put for a year with one contract with a probably 85 to 90% probability that I stay with an income next year of $5,269. Now, that's not life-changing money, but that's income. And the nice part is let's say I did this trade like every 90-ish days. Because there's a chance that like between 90 and 180 days, this trade is offering 50 to 75% profit. If prices are sideways or higher, there's enough time decay in this where that $5,200 that I would plan on the income could be done maybe 2 to 3 times for the year. So there could be a pretty decent buffer where I mean, I can go back and look at the deltas. I just based it on a technical level, like the April lows. But if I want to make it like delta specific, like just selling like a 20 delta, selling a 15 delta, that's fine because that way it kind of stays within the volatility regime of the current stock price. But if I did this like 2 or 3 times for the year, it's like that's 10 grand or 15 grand that would be like a nice little buffer for my portfolio, right? And the chance of assignment on this is pretty low because every one of these stocks would have to go back down to April lows. Okay. But is it a lot of volatility and buying power? Yeah, it is. Because a 170, I mean, look at the stock price here. If I had a 170, okay, 170 plus 160 plus 480 plus 345 plus 86 plus 210 plus 140 divided by 8, my average price is about $199. Okay. So I'm probably going to use that much in buying power. Like in order to do these trades on a cash account, like an IRA account, I'd have to have about $160,000 to take those trades. Okay, now that's just the allocation. If I make $5,200 on that investment, so 159.10 or 159 100, that's the cash account. A portfolio margin account is going to be a third of that. So I mean, portfolio margin, you can obviously get a lot more return on risk, a lot more return on net liquidity. But that's truly what the cash value is. So if I make $5,200 out of 159, I make it about 3.2% of my portfolio with not even owning a single share. Okay. So is that a good trade? I mean, not really. Not as far as like that's a lot to allocate for a 3% gain in my portfolio. But if I did it 2 to 3 times for the year, now I've got 6.4%. Now I've got 9.6%. And I never own a single share. And so I can just generate the income. That's not a bad trade. Like that's a pretty safe 9 and 10% gain for the year without taking a ton of risk. But yes, it does take cash and capital to allocate it. Okay. All right. So that's a little bit on the LEAPS. Now, I want to go into and I'll summarize this, but we'll spend another time and we'll kind of extend the strategy session into the poor man's covered call. But this is like selling puts out a year to make this a LEAP. So it's a long-term expiration, but I'm selling options instead of buying options because the flip side of all this is if I think the market's going to go higher, I just buy calls out for 12 months, right? I don't like to do that. I never like just to buy calls without having something that can help me lower my cost basis. So as an example, let's take, here's actually a good trade for a poor man's covered call. I'll do this really quickly and then we'll spend another strategy session on this. Okay. MP says, don't forget if you're assigned and fairly close to the strike, you can generate huge income from the covered calls. Exactly. That's the thing is like, I wouldn't do these on stocks I didn't want to own, right? So if I got assigned on anything, the idea is I would add a covered call. I'd repair the trade until I was happy or keep it at a huge discount, and that discount could be awesome. I mean, we could have like a 20, 30% discount on a lot of those stocks and indexes. All right, so I'm going to go into NVIDIA. I'm just going to have some fun here. Let's go out to June of 2026, okay? And here's the option chain. If I buy, this is what's crazy. If I were to buy a, let's go here for the strikes. If I bought an in-the-money call, I'm going to try to get my delta up to like a 70. I'm going to buy a 150 call. This is why I don't like to just buy calls. If you buy calls at the money, and this is where traders get in a lot of trouble. If I bought a call right now in NVIDIA thinking this stock's going to go up, well, if I bought a 173 at the money call out a year, I'm going out 336 days, it's going to cost me $3,000. Now, $3,000 is way cheaper than allocating $17,000 for this position. Okay, yeah, go ahead and take a screenshot there, Donna. Take a screenshot of this if you want for the LEAPS. I do have to wrap up the session here in about 5 minutes. So this segment we can save like the buy LEAPS, like long option LEAPS, and poor man's cover call. We can do this for another strategy session. Okay. All right. So real quick, going back to this, if I were to buy the 173 at the money call on NVIDIA, it's going to cost me $3,000. Now it's cheaper than allocating $17,000 to buying the underlying shares right now for 100 shares. So I pay $3,000. However, if I pay $3,000, my break even on this trade is 173 plus 30 bucks. 173 plus 30.30. My break even price, if I take out the time premium, my break even price is 203.30, which means I need NVIDIA over the next 336 days to get above 203.30. To me, I hate that trade. I'm giving the market such a huge head start by just paying for that premium. So what I'm going to try to do is offset that by going a little bit deeper in the money. Okay, so if I go deep in the money, let's go to like a 150. Now I'm going to a 70 delta. I'm going to pay more money for it. If I want to take out, here's what's more expensive, but it's still cheaper than buying the shares. Let's go to an 80 delta. Okay, what's my break even here? If I go to an 80 delta, a 127 call, that's deep in the money. Okay, 127 call plus 58.90. Okay, that puts my break even on NVIDIA at 185. Well, that's cheaper than 203, but I'm paying a little bit more money for that. I'm paying now almost $6,000 for that trade. It's still cheaper than buying shares at 173. So rather than allocating $17,000, I'm only paying $6,000, $5,900. Okay, so if I want to go deeper than that, let's take even more time value out of this trade. Let's go to a 90 delta, which is deep, deep, deep in the money. Okay, let's go to like a 110. I guess we're going to 100. That's way deep in the money. Okay, now my break even's 181. So my break even would be 181.10. So anything above 181, I'm making money on this trade. But I am risking $8,000 to be long Nvidia. So what I like to do, if I'm ever going to go buy an option out at a 70 delta, 80 delta, 90 delta, whatever it is, in the money call option out for a year plus, what I want to do is sell against it. So here's an easy way to do it. See this debit? If I bought a $100 call, it's going to cost me $81. But my break even is 181.10. So what's cool about this is I can go out a year and have this be my break even. But what's nice is I can sell against it and try to collect some income. So let's go out to right here before we have earnings on NVIDIA on August 22nd. Let's go out about 30. Let's go through earnings. Let's go through earnings and let's sell the 180. If I sell the 180 call to pair with my 100 long call, my net debit is 72.85. Okay, so how's the math work on this? I buy a $100 call, my break even is 72.85, and I get it called away at 180. I can make $715 on that return. So if I make $715 on a trade that's going to cost me $72 or $7,300, what's that return? Minus 72.85. That can't be right. 712 divided by $7,300. Okay, so I'll make 9.7% return on this trade, which doesn't really require the price to go anywhere up other than like it needs to be higher than $7. So can we go $7 up? Yeah, we can make income. I can actually make $700 on this trade in the next 43 days. If NVIDIA goes up. If NVIDIA goes down, well, obviously, then I'm going to be selling against it, selling against it, selling against it, and I might chase a little bit. That's a big area to have some pullbacks. So right now, it's like I don't like NVIDIA sitting at all-time highs and thinking like I'm going to buy these options. I think that's pretty bad trade. Really, that's a bad trade. So I want to spend some more time instead of just like, yep, that's it. There's your poor man's cover call. No, let's do another strategy session dedicated to it. I think today the takeaway is we're able to get into the leap side and sell. That's what I like to do. My personal preference is to sell leaps on underlines that I'm willing to own and repair and allocate for a core position. I don't really want the shares, but I'm willing to take them at a massive discount if I get assigned. And obviously you can see like the April lows this year are really big discounts, because the price has bounced pretty aggressively off those lows. We're probably closest to assignment on something like Apple, maybe Tesla. That's about it. I mean, Amazon is well off the lows. Google's well off the lows. Meta's well off the lows. NVIDIA's way off the lows. AVGO way off the lows. Microsoft way off the lows. So if I had any assignment, probably Apple, Tesla would be the only two that might get assigned just because they didn't respond as aggressively to the upside as the others have. But the SPY, the index would have to fall 24%. I could do the same thing on the QQQ. It'd have to fall probably 25 or 30%, right? So it's a good way to also, if you've got the capital, generate some income. You don't have to own the shares, and you can stagger this in. I mean, I'm pretty comfortable on some of my portfolios adding this exposure to like $100,000 allocation, $200,000 allocation, and have it turn into $5,000 or $10,000 every 60, 90, 120 days. I could do that a couple times a year. Generates an extra bump of maybe $20,000 to $30,000. Maybe on some of my accounts that's 5 or 10%. That's a nice little buffer to have. I just keep taking trades in good income positions. Okay, why not lower the capital and do something like TQQQ? Are you giving me a leveraged instrument? Are you nuts? Okay, so are you telling me you want to be using something like a leveraged instrument, which has no business being held, right? Is this leveraged? Leverage fund that delivers 3x exposure? No way. No way. There's no way that that's going to work on a leap. Leveraged anything are going to be repriced all the time. So these are good for like literally 1 day to 1 week exposures, and you time the market. I would never sell a leap on something like this. The only thing I'd sell a leap on maybe would be the SVXY. I would do a trade on the SVXY. This is pretty much a VIX instrument where I can take the reversion of the VIX and capitalize on that. Like when we had the drop in April, I bought shares of this at $34. It wasn't a big, I mean, $34 to $44 doesn't seem like a lot, but that thing responded 30% just like the SPY did. And it was the crush that we had in the VIX as well. So that's one simple allocation I'm willing to take, but I do not love like double and triple leverage anything because they get repriced. You're not wanting to hold any of those for more than like maybe a week or so. That's about it. Anything longer than that, you're going to see the repricing. You're going to lose. Yep. So if you're doing triple Qs, triple SPY, I don't care. It's not the trade that I'm talking about. A leap is not the way you trade those. Those are more like short-term hedges, playing the market timing, playing some long VIX, get those exposure to see if the market does take that little correction. So anyway, all right, let's do this. Let's put a pin in this for right now. And we covered a decent segment on leaps. I was mostly focused on selling leaps. But what I'd like to do is we'll continue this next week. We'll go poor man's cover call and also continue with the leap segment on buying calls, but turning it into a diagonal spread. That's one of my favorites to go out longer term on the call side and then sell against it. And you can do the math and figure out I can generate income on this, put way less capital up front. Instead of buying shares and buying the underlying, I can just do options, but give myself lots of time in the trade, sell against it, and take some good income trades. And for capital efficiency, poor man's cover call is actually pretty good. Okay, so we'll do that for another strategy session. I'll save this thumbnail for another day. Okay, I'll let you go. I got to bounce and have a good rest of the day. We'll come back and I'll see you tomorrow in live sessions. I will not be here for the final hour tomorrow. I'm going to try to post a video to premiere at closing bell or the 3 p.m. Premiere. And then next week, like I said, we are doing my daily profit play room Monday through Friday with the themes. Macro Monday, Technical Tuesday, Watch List Wednesday, Trending Thursdays, Fast Money Fridays. That's just kind of what stuck with me right now. And a little bit of showcasing and segments on each one of my services just to make sure you know what's out there. I'm not a one-trick pony. I trade a lot of different ways. My approach is truly a whatever it takes. I don't care what I have to do to make money. I don't care about being right. I care about making money. So there's a lot of ways to do it. And I think there's something in here for everybody if you want to learn some strategies and get some core education. I think I've got it. So, all right, I'll let you go. Kindly hit the thumbs up button, like, subscribe, all the good stuff, and come back and see me soon. Thanks, bye.